Hi, this is Martin here and welcome to another Market Outlook iVSA style for week ending 2nd of February 2018. I apologize, last week I wasn't be around because I was traveling to Singapore, some business trip, so not able to do this outlook. Of course, as usual, we have a disclaimer. Everything we say here are more for educational purposes, so do see your financial advisor for more in-depth so-called advice and recommendation. Now let's look at the 2nd of February headline, which is a really big one, is the US Dow Jones or US market, which is correction that we are seeing in there. No doubt US Dow Jones is staying above the 26k in here, but is the market correction coming along? And also another Bitcoin sell-off that we see, which we've been selling almost every week. Has been doing this market outlook. We've been selling, and there was a hacking incident that actually happened in Japan that causes one of the Bitcoin to go through almost a 55% sell-off that we see from the peak of 19,000 US. Now is just around 8,655. You see on the right hand side here. All right. So that has been quite interesting to see this market that we have. Now, as also we can see the Bitcoin sell-off that we have and the hacking incident that we have, which is more than 55% down from the high of 19,000, now trading about 8,655. You can see it in here. That's a lot of room to fall. Now the question is, will this still fall back to 6,500 when we first reported in the first video that we did with the Bitcoin? So that when we first reported was almost in the first week or second week of December. Less than a month, this thing really swing up and down. Is this an investment? You tell me. Okay, and also the Apple quarterly earning was out last night. Actually, it was out more like this morning, and the result is a bit of miss and also hitting. Now they do miss the sales iPhone target, right? They were supposed to clock like 80 million, but they did about 77.3 million, which is just short of about 2.7. But because of the higher price of the iPhone X, that compensated for the earnings that came in, bidding estimate around $3.89. So that's been great. Those of you who have iPhone, now we do take note, the iPhone X are cutting down a lot of the production in there. So that's why also causing the mobile phone to slow down a bit in here, because a lot of the manufacturing, there will be some sort of the supply chain that comes in. So take note of this too. The US market and also the global market correction, which is also in tandem with, of course, no doubt, we did see some Amazon did have a very good earnings closing, and it's also the earnings season that we see in here. But really in mind is the weaker US dollar against major forex. So you can see the ringgit is getting stronger, you can see the Sing dollar is getting stronger, so that's actually good, but making US dollar more competitive in terms of export base. The Malaysian side, on the GE, the rally is still on. Like it or not, we have the large cap holding ground, and this is also partly due to the Bank Negara raising interest rate this week at 25 basis point, but that could point to later scenario, which is could be 6 months to 1 month, 1 year down the road. We will be talking about non-performing loans, which we do see a slowdown in the property sector, but that yet to be known. But typically that's what the higher interest rate will lead to the cycle. No doubt the interest rate which is higher will lead to banking stock doing well. That's what we see. The Maybank is up, CIMB Bank is up, Hong Leong Bank is up, Public Bank is up, and that's what driving this large cap and also the KLCI, which is going up. However, there was a sell-off in the mid cap and the small cap stock, and that affects a lot of the retail investors that we see today. A lot of them are cutting loss, and they don't want to be in here. Is this a correction that we want to usually see before they make the general election 14 dissolvement of the parliament? Maybe, but the market has sort of from the small cap and mid cap stock, it's tapering now, moving sideways in here. Maybe just after Chinese New Year or before Chinese New Year, probably another skittish upwards. That's most we can see. But the buy diamond hasn't come out yet for the KLCI. Also, the STI is still staying above 3,500. It's crucial to stay at this moment, and we shall look at the charts. Now, the first one we want to look at is the Dow Jones. We haven't seen any red diamond yet, but the key point was this drop off here. You can see from green, okay, to yellow, and that's more like a going into a stage 3 distribution. And normally you will see on the next chart that I have for the Nasdaq, we already have the red diamond. No doubt there was a lot of red diamond that goes in and out and in, but the January run was one of the best one you could see here, right? We might now the question is, if we were to get a minor diamond, it has to be in the next 1 or 2 weeks, else we will see this correction happening longer than we should. Right, on the KLCI, as I said before, mainly driven by the banking stock due to the interest rate. You can see the minor and major diamond, which actually came out somewhere rare, continue to make a good run, but we do see correction, but still should stay above 1800 for KLCI. Now this chart you see here is 30th of January, because we have a 2 long day off, right? The Thaipusam as well as the Federal Territory Day. On the STI, yes, not so good. The red diamond is already out. We have the minor, major, and this is what causing the market to really pull back. But importantly enough, staying above the 3000 level to ensure the trend, uptrend for the SGX STI retain for 2018, which I still think is bullish. Minor correction is acceptable in here, but that's where you want to buy on the dip. Okay, and also on the mid-cap stock SGX, we do see also a red diamond in here, indicating the trend somehow has turned from bullish to bearish. So the red diamond is something like a signaling signal that you usually see in real in traffic light, and the same thing, red, you stop or you want to exit. Hang Seng still maintaining its uptrend, but typically we see the entire region, the US, Singapore, the Malaysia, probably Hang Seng will soon follow. But then again, it taking a bit of cue from the Shanghai index and so the Shenzhen, which is continuing to push up. That may have a bit more room to go higher. All right, let's look at the top leader, gainer and loser for SGX and KLSE. Now, first foremost is SGX. This is an oil and gas play, as you can see in here. The minor diamond in here is not triggered, but this minor diamond is triggered on this bar in here. Those are members who know what I mean of the trading signal. And this one has done pretty well, straight up a 62.5% return since the minor diamond in here. And on the KLCI side, despite the sell-off, we do see on the mid cap and small cap stock, definitely oil and gas, similar to Singapore, which is the mermaid. In Malaysia, we have the T7 Global, a 52% gain in here. Classic example in here, you can see long period of stage 1 accumulation, and then you got the minor and major diamond. This thing just kazoom, 52% return in within the space of 1 month. I know it's hard to find these kind of stocks, but if you do have and do subscribe to iVSAchart, give a bit of attention. It's a bit like, you know, fishing. And if you put in enough effort, you can find one of these, what we call stage 1 accumulation. Good risk to reward, definitely do the trade. All right. On the big 1 week loss is PUC, and this is a very small cap stock, tend to be very speculative. He has gone from gaming, now it's gone to advertising. Definitely we see when we have the first minor diamond in mid-August, all the run to January 10. All right. That is a possible 146% return. I know it's over a period of, let me see, this is 1 month, 2, 3, 4, 5 months. It's in the stage 1, and then you got a stage 2. Okay, this is stage 1, and then you have a distribution stage here. There are lots of what we call sign of weakness, and we have the bearish volume, and then the market just broke down. And you would have avoided this 31.2% loss if you sort of obey the red diamond sell-off in here. Right now we do see this, as you can see in here, let me get back to here, is the stage 4 sell-off. We have the nice stage 3 distribution here. This is the stage 2, this one was the stage 1, and this is stage 3 on hindsight, because this is stage 4, this is stage 2. All right. Okay, now let's look at the ATA Robo-Advisor, and this is more for information purposes, where we select a lot of the stock based on the FADDO stock. Right now, we have done a lot of clearing, and you can see we are almost back to 53%. Almost 50% of cash, which is stock on hand is only 44,000. The portfolio has still made a small loss, minus 2% compared to KLCI, which is still up 8.6%, partly driven by the banking stock in here. So we still have Oka, Dufu, and on the Singapore side, Kyung Hon and LHN, which is registering not too bad. Portfolio hasn't really been beating the index, as you can see in here, compared to the KLCI. So this is as of the 2nd of February 2008. So that's all we have, and this is Martin signing off. Do contact us at the number below in here, and watch out for our stock picks, especially for our members, and also our coming weekend talk on January election 14. So do go to our website ivsachart.com/events.php to find out the next workshop, or visit our Facebook and our YouTube channel dotted iVSAchart. So that's all I have. Thank you for watching.